What is going on, YouTube Nation? This is Dark Dividend. If you guys are new to my YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. So we're doing round 2. And I actually kind of maybe sound like that guy in Street Fighter when he says round 2. But I'm going to go over these 5 high-yield real estate investment trusts that I own and love. And as a reminder, tomorrow I'm going to have a collaboration with Oracle Investments. It's going to be 2 p.m. Eastern Time. I posted in the community section. But I'm just letting you know that's where I'm going to be, 2 p.m. I get to at least watch the Ohio State game. They're still doing pretty much a quarterback tryout to get ready for the Notre Dame game. And one thing I want to emphasize about REITs is their reported income. Okay, so say like you earn $500 in dividends with REITs, that counts as $500. So that's one problem with REITs. But a lot of people with REITs like putting them in their traditional and/or Roth IRAs because that income that you have to report is actual income, okay? You're not getting taxed on it. So that's one positive with that, putting in a traditional and/or Roth IRA. So the one thing I also want to emphasize, I do invest in high yield dividend stocks, high yield REITs, and dividend growth is very important. Now, dividend growth, low dividend yield is very important, but I also like the hybrid types that are kind of in the middle and a little bit higher, but you have to be very careful with that because you can get a dividend cut. A lot of people saw that with NLY stock and people that have invested in AGNC stock in the past. You know, AGNC was what, 18 cents per monthly dividend distribution, then went to 16 cents. You can correct me if I'm wrong. Then it went to 12 cents. And they have not rebounded since. And they're a high dividend yield stock. They're like $9 a share. And I made a X post on that. So make sure you follow me on X. But remember, you know, you have REITs like Prologis. That's one I'm looking at. I'm not going to even mention that in this video. They have a low dividend yield, but they have extensive dividend growth. So you have to be aware. And it's always good to invest in low dividend yield because they have really good dividend growth. But some of these that I have, like I said, you know, are 5%ers, 5% dividend yield, and they have pretty good dividend growth. So I'm going to go over these ones. I'm not going to go over like FFO or anything. I feel pretty confident in them. And there's been a lot of dividend announcements with hikes. And I'm going to just go over that real quick. Take a hint because one of them just hiked their dividend, made a big announcement. And with these ones, these guys have a very strong tradition, a very strong backbone. I'm not going to go too in-depth reviewing these guys. I'm going to go over their revenue trends. Remember, with REITs also, FFO is more important. Net income, who cares? It's not very an important metric. PE ratio, that's not an important metric. Some YouTuber actually thought that I was saying that on my channel, and that's not true. So I do not emphasize PE ratios when it comes to REITs. So be aware of that. So let's check these 5 dividend stocks or high yield REITs out right now. First one I'm going to go over is WP Carey. They're sitting at 63.82. Average volume 1.02 million. The market cap is 13.65 billion US dollars. Year range is 62.83 to 87.30. So there's a huge dip. The day range is 63.59 to 64.26, and its previous close was 63.65. So as I said before, I'm really going after the financial sector and real estate sector because, I mean, if you look at this during the pandemic, a lot of them were doing well against the S&P, and they took a huge nosedive. So they're trying to recover, but they're not there yet in the past 5 years. And, man, they have not done well since the pandemic. So I'm going to go over the revenue trends for WP Carey as well as their dividend history. So I like seeing increase in revenue when it comes to real estate investment trusts like WP Carey. So here's their annual revenue in millions US dollars. 2018 it was 885, 2019 it's 1,232, 2020 a little bit you can blame on the pandemic, 1,209, 2021 1,331, 2022 1,479. So their FFO has been pretty stable and pretty strong. Revenue has gone up, which is good. They have a very strong portfolio as well. I'm not going to go too in-depth with these guys, but I just want to go over the revenue and dividend history of WP Carey. So I'm going to start in 2011. Here's their quarterly dividend distribution. It was 51 cents to 55 cents to 56 cents, 2012, 57 cents to 66 cents, 2013, 82 cents to 84 cents to 86 cents to 87 cents to 90 cents to 94 cents, 2015, 95 cents to 96, 2016, 97, 2017, 99 cents, 2017, $1, 101, 2018, 102, 103, 2019, 104, 2021, 105, 2022, 106, 2023, 107. So expect a high payout ratio with REITs. Remember, 90% of what they make go back to investors. Number of dividend increases in the last 5 years is 20. Dividend growth in 5 years is 0.84%. So again, high yield, you're going to get a slower dividend growth. It's not bad. This one, it's not bad. Even though it's 0.84%, that I would blame that on the pandemic a little bit. Their dividend yield is 6.72%. So if you bought one share, you made $4.28. That's not too bad. Let's go over another REIT that's a high yield REIT that I own that I really like. Another one that has taken a hit is Spirit Realty Capital. SRC is a symbol. Their average volume is 747.14K. Market cap is 5.24 billion US dollars. Its year range is 34.31 to 44.65. Day range is 37.01 to 37.60, and its previous close is 37.59. Let's go over the revenue trends and dividend history. So again, revenue trends have been pretty strong. This is what I like about them. 2016, this is annually in millions US dollars, 435, 2017, 431, 2018, 445, 2019, 516, 2020, 483, woo, pandemic hit hard. 2021, 608 to 2022, 709. So there are good revenue trends. This is what I really like with these guys. And again, good revenue increases. I feel very confident with the dividend hikes. And I'm going to go over that on Zach. I'm going to start in 2014. They were a little stagnant at 17 cents. Then 2015, 2016, they cracked 18 cents, a little stagnant. Then they cracked 13 cents. In 2019, 63 cents. 2020, 63 cents. 2021, 64 cents. 2022, 66 cents. They just cracked 67 cents. So their dividend growth in 5 years is 11.10%. Their dividend yield right now is 7.06%. Their payout ratio is 74%. So if you bought one share, you made $265. So this is one that I really like, that really I've been targeting on M1 Finance. These guys have been down, and this is time to capitalize. Let's jump to the next REIT. And this is the corporate spinoff from Penn Gaming. Gaming and Leisure Properties. They're sitting at 49.04. Now these guys have kept up with the S&P, which is quite impressive. Average volume is 1.38 million. The market cap is 12.88 billion US dollars. Its year range is 43.46 to 55.13. Day range is 48.64 to 49.50. And its previous close is 48.59. So I would consider them a rival to VICI Properties. Yes, VICI. In classical Latin, it's VICI. So I'm just letting you know. So I'm going to jump to the revenue trends and dividend history. And this is really good with their revenue trends. So annually in millions US dollars, 2016, 828, 2017, 971, 2018, 1,055, 2019, 1,153, 2020, 1,153, a little stagnant because of the pandemic. 2021, 1,216, and 2022, 1,311. So they did make a comeback since the pandemic, and that's quite impressive. The revenue was like almost like stagnant. They only lost like a little bit annually in millions US dollars in 2020, but not drastic. So that's a huge comeback. And I got to give these guys credit. Why I own them. Now I'm going to jump to their dividend history. And again, high dividend yield, which I'll go over, slower dividend growth. So here's our quarterly dividend distribution. 2014 it was 52 cents, 2015 it was 55 cents, 2016 it was 56 cents to 60 cents, 2017 62 cents to 63 cents, 2018 68 cents, 2019 70 cents, and a little bit of a cut, you can blame the pandemic, to 12 cents, and then 2020 60 cents to 65 cents, 2021 67 cents, and you have a little special dividend at 24 cents to 69 cents to 71 cents, and then you get a little bit of a special dividend at 97 cents, and you can correct me if I'm wrong, and then they jump to 73 cents. They have a high payout ratio. Again, REITs are 90% of what they make go back to investors. Number of dividend increases in the last 5 years is 8. Dividend growth in 5 years is 1.65%. So if you bought one share, you made $288 with a 5.93% dividend yield. So that is quite impressive. So we have WP Carey, we have these guys, and we also have Spirit Realty Capital. And I'm going to go over two more, which is the REIT, which I consider a rival for GLPI. And by the way, they just hiked their dividend. VICI Properties sitting at 31.19. Average volume 4.25 million. The market cap is 31.61 billion US dollars. The tier range is 29.29 to 35.07. Day range is 31.14 to 31.58, and its previous close is 31.22. Now, let's check out their revenue trends and dividend history. These guys annually in millions US dollars have done well. 2017, 187, 2018, 897, 2019, 894, 2020, 1,225, 2021, 1,509, 2022, 2,600. So that is a huge increase in revenue. Now let's jump to their dividend history. And per Business Wire, VICI Properties announced today that its board of directors declared a regularly quarterly cash dividend of 0.415 per share per common stock for the period of July 1st, 2023 to September 30th, 2023, representing its annualized amount of 1.66 or 166 per share and a 6.4% increase from the current dividend rate. So almost 42 cents per share. That's pretty solid. The dividend will be payable on October 5th, 2023 to stockholders of record on the close of the business of September 21st, 2023. So that's pretty attractive. Now let's jump to their dividend history. Excuse me, dividend history. So we're going to jump to 2018 quarterly distribution. It went from 16 cents to 26 cents, 29 cents. And then 2019, it was a little stagnant, 29 cents. To 30 cents, they cracked 30 cents in 2019. 2020, they cracked 33 cents. So they did hike their dividend during a pandemic. 2021, 36 cents to 39 cents. And they didn't list the new dividend announcement on Zacks, but that's still pretty strong. And per Zacks, this is before the dividend announcement, the dividend growth in 5 years was 8.01%. So if you bought one share, you made 156 with a 5% dividend yield. Now again, the dividend announcement was higher than 39 cents. So that is very attractive. So I wanted to include that because I like referring to Zacks for dividend history and dividend growth. Now let's jump to the final dividend stock, or REIT. Final one I'm going to say is CubeSmart. I own this one. I absolutely love it. Sitting at 40.49, the average volume is 1.70 million. The market cap is 9.10 billion US dollars. The G range is 36.82 to 48.93. Day range is 40.44 to 41.06, and its previous close was 40.77. Let's go over the revenue trends and dividend history. And by the way, I see CubeSmart everywhere when I'm driving on the highway in Ohio. So let's jump to the revenue and dividend history. So the revenue trends are very strong. This is annually in millions US dollars. 2016, 510, 2017, 558, 2018, 597, 2019, 643, 2020, 679, 2021, 822, and 2022, 1009. So that is impressive. Now let me jump to their dividend history. Dividend history is very strong. Here's our quarterly distribution starting in 2013. It was 11 cents. 2014, 13 cents, 2015, 16 cents, to 21 cents, in 2016, 2017, 27 cents, 2018, 30 cents, 2019, 32 cents, 2020, 33 cents, 2021, 34 cents, 2022, 43 cents, to 49 cents in 2023. So the dividend growth in 5 years is 10.94%. So if you bought one share, you made 196 with a 4.81% dividend yield. Again, high payout ratio, big deal. They are a REIT. So their dividend increases in the last 5 years is 5. So before I conclude everything, again, FFO is the most important thing when it comes to REITs. Now, I'm going to have a video for you tomorrow morning before I do my collaboration. So pretty excited to just go over some stuff with my dividend investing strategy. Just a little bit, just a few things that I'm doing. And just a little bit of my focus right now. And I'm going to jump to my disclaimer. So as a reminder, this is a disclaimer. This investing channel, okay, my dividend investing strategies and my dividend investing journey is not financial advice for entertainment purposes only. I have a disclaimer in the description. This is, again, if you are seeking financial advice, seek a financial advisor, somebody certified to give financial advice. When it comes to investing, you can lose money, you can gain money, but there's always a risk when it comes to investing. So always seeking financial advice from a financial expert or someone certified to give financial advice. I'm just being very clear. I own these dividend stocks. I own WP Carey, I own CubeSmart, I own GLPI, I own VICI Properties, and I own Spirit Realty Capital. I do not plan on selling these stocks unless if something drastically happens, a dividend cut or something just really crazy. That's the only time I would sell them. Okay, so I'm very transparent with my dividend investing strategy. I'm going after the financial sector and real estate sector. So I just wanted to be clear. Numerous times, that's what I'm targeting. So this is my strategy. This is my YouTube channel. This is not financial advice for entertainment purposes only. You guys take care and have a great Friday.